Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York. It is Tuesday, last day of February 28th, 2017, and this is the Daily Report for Gold and Silver. As traders, investors, and basically citizens await President Trump's first address to Congress tonight, we have the markets under subdued pressure as all these financial markets seem to be in a holding pattern, awaiting what news and what details will come out from tonight's speech to Congress. Gold is trading under pressure today, currently trading at $12.49. In terms of April futures, puts it down about $9-10 on the day. The low has been $12.48 with a high of $12.59. Spot gold trading in the same numbers. Net change, of course, is different, down about $4, but at about $12.48, $12.49. And as I said, it has been trading under pressure throughout the day. Silver also trading lower, but it is trading off about 0.4%. This, of course, is our most active March futures, which are just coming into expiration. 1834, that is our current print. The low on the day has been 1828 and the high 1851. So traders, absolutely no doubt we are seeing some profit taking coming just ahead of Trump's address to Congress later on tonight. On a technical basis, though, we do see some signs of potential weakness. However, we're not there yet. I want to look at a couple of different charts, both daily charts. First chart is in Japanese average format, and that is the chart that we have up. When we take a look at that, we can see, as we look at a given trend, we can see where it begins to run out of steam. And then, of course, the pivotal point, the color change, again, as market moves up and so forth. What we do have right now on the Japanese average chart is, as of yesterday, we still had no lower wicks, which meant that you still had pretty solid energy in the upside trend. However, today we are truly getting a doji, and a doji, as you know, can be a sign of consolidation. Just prior to a pivot point, we've seen it on many occasions. You can see that down here, for example, or right in here. You also see it right here. So it is a pretty important character and can reveal that. At the same time, we do see it at points in which the market's consolidating ever so slightly before returning to the primary direction. I draw your attention to these two doji candles right here. In other words, the market had gone up, it had retraced a little bit, and then had moved up a little bit, but then moved sideways. So you can get it as an indication of a sideways move. But we are also getting an interesting pattern when we look at this chart through the eyes of a straight candlestick chart rather than the Japanese average chart. And I've just gone ahead and pulled that up. Again, a daily chart, and this is a standard candlestick format, and we do have a variation off of a three-river evening star. And the key of this particular pattern, of course, after a defined uptrend, we get a long green candle, we get a star gapped in the middle, and then the red candle. Size of this red candle is not all that great, so it's not really showing me a strong pattern, but it is a variation off of that. And more importantly, we have identified a level of support that is in the market right here. And as long as we're trading above this particular level, which comes in 47, 48, and then below it, of course, 42 is a major level of support. As long as these levels hold, I have no real inclination to believe that we're looking at some sort of a potential reversal and the market moving to a lower number, or meaning moving lower. So we are going to maintain our current long position. We are going to maintain our stop. More importantly, if we do get the right kind of a dip, we might in fact look to add to our long position. If we do, we will send out a special trade alert through text message as well as email to let you know that we are recommending exactly that. So traders, we are looking at silver, a daily chart of silver, this in a standard bar chart format, along with a MACD, moving average convergence divergence. We talked about the fact that when we looked at it yesterday, it appeared as though it was looking to see if it crossed. You can see it crossed ever so slightly, but now we've got the fast line moving back above the slower line, which represents the fact that we could see a further increase long term in silver. Now, we've had a tremendous run in the precious metals over the last 2 months. As I've said, now that February has come to a close, we have both gold and silver trading to higher ground on a monthly basis for the second consecutive month. We have not been able to make that statement for quite some time. We've got a clear-cut trend line, of course, in silver. As long as it maintains above this support line, I think we'll see further higher pricing. However, we also have identified 1850 as a resistance area, and the fact of the matter is, for the last 2 trading days, the market has attempted to take that out, but attempted it unsuccessfully. Traders, in other markets that we follow, 13 is not a lucky number for U.S. equities. After trading to new historical highs for 12 consecutive trading days, this being the 13th day, this is the first time we have the Dow Jones Industrial Average actually closing lower on the trading session. As I said, for the first time in quite some time, in 12 consecutive days, breaking it today. A 20,812. Nominal fractional change is about 0.1%, down about 25 points. But once again, traders are in essence awaiting what information will come out of tonight's address. Standard & Poor's also down slightly, about 0.2%, and the NASDAQ trading about 0.6% lower on the day at 58.25. Now, the dollar is slightly higher. It had been slightly lower on the day, but the key with U.S. equities, as well as the dollar, is subdued trading with pressure to the downside or slight upticks awaiting news. As far as gold goes, although we are definitely closing lower on the day and now are witnessing a couple of days of lower pricing, now that we are at the final day of February or the final day of this trading month, gold has closed higher for the last 2 consecutive months. So traders, no doubt, 13 is an unlucky number for U.S. equities. We talked about it in our opening letter today. To illustrate that point, I've put up this chart. It is in bar chart format. It is a daily chart. Each line represents a day. And the way that we've set up the color coding is that the color bars are based upon the previous close. So if the market closes higher than the previous close, it is a green candle. And with that in mind, we can easily see how today breaks that record historical climb of 12 consecutive days, trading days, in which the market was green. In other words, closed above the prior close. That, of course, is up till day today, which is the 13th day, and we can obviously see this as being a red bar. Now, if it would have broken this record and gone to 13 consecutive days, that would have been an all-time record for consecutive closes that are higher than the previous close. 12 was the current record. We matched that, but no cigar. We certainly saw the market slip, but ever so slightly, down about 0.1%. And I think that the key is long-term is really going to be contingent upon what we hear or do not hear tonight when Trump addresses Congress. And traders, just to give you an idea of how unique and special the fact that you saw 12 consecutive days in the Dow, take a look at the Standard & Poor's. And here we've got the same setup. The bars are color-coded based upon the previous close. You get 7 consecutive days, then a down day. You get 2, then a down day. You get 3, then a down day. So you've never really had more than 7 consecutive days on this particular run to new record high prices in U.S. equities. And traders, lastly, do want to take a look at crude oil. This is more of a long-term view because we're looking at a candlestick chart, each candle representing a week in trading, so a weekly chart. Look at the kind of ranges you'll see as the market moves up. Pretty solid ranges between where the market opened on Monday and closed on Friday. Same with it selling off. But now look at the activity over the last couple of months. You've got a cluster of small-bodied candles with large ranges, meaning that there was indecisiveness week in and week out, and absolutely with some really strong resistance right at around $54 per barrel. We talked about the fact that we believe we would see a range-bound market. We've certainly got that. Over the last 2 months, this market has effectively traded on the low side between $52 and $54 on the high side. We're trading right up the center of this channel line. Channel line still maintains a bullish bias, as you can see, but we are not really gaining any headwind when we continually trade within this defined range. I would expect it to have some potential to move higher, but overall, I am looking for crude oil to continue to trade sideways. We are looking at gold trading under pressure today, as I said, trading down about $9-10 on the day. 1242, that's a critical area. We need to see that support level held on a technical basis, of course. And as we get closer to Trump's speech itself, we could see increased volatility in the markets itself. On a straight technical basis, I am still looking for gold prices to advance and go higher over the next couple of weeks. However, I do believe we could see some volatility come into the market. If that's the case, we might want to use that to pick up the other leg of our trade. As you know, when we went long last week, we did make the recommendation to hold back, to reserve some capital, to look for a dip, to enter another position in gold. And we might in fact get that opportunity today. If we do, I will send out a special trade alert, both through SMS, text message on your phone, as well as email. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.